Joining us now on the new data, interest rates, and much more, Chicago Fed President Austan Goolsbee. So your ears were burning probably there, Mr. President. You heard.
Yeah, there was Rick. I haven't seen him in a while. I got to have him over to the Chicago Fed.
He's local.
Exactly.
He's local.
I should go to, what is that, Scoozy? What's the name of that? Is that restaurant still open there? I think that's where I used to go. A lot of questions, Austan. I thought it was interesting to hear the Chairman Powell the other day kind of put some cold water, or at least raise the possibility of what we call a pause. We get pauses every once in a while, but maybe we don't do another 25. Coming after a 50 and a 25, which a lot of people, maybe you included, weren't absolutely sure was the right move. Now all this hot data just came out that Rick gave you, which would kind of explain the chairman. But I didn't understand it because the last jobs number was kind of weak. So I didn't know what he was looking at. And I'm wondering whether the Trump trade is now informing some of the Fed's decisions. Are you preparing for tariff inflation?
Well, you got a lot going on in there.
I know.
will say,
I think a lot.
I always clarify the rules say I'm only allowed to talk for myself. So if you're asking me what the chairman thought, you gotta reach out and ask the chair. That said, as I look at the economy, the basic story of what's been happening, if you're looking for the long arc, is inflation has come way down from its peaks. The job market cooled to something like about full employment where we want it. We did get 1 month of weak jobs numbers that it's hard to reconcile. What does it mean for the long run? Because we had a bunch of hurricanes. We had a big strike from Boeing. Previous to that, we had a couple of very strong numbers. And previous to that, we had one weak number. So, again, we got to take the through line. And I think the through line, as long as we keep making progress toward the 2% inflation goal, over the next 12 to 18 months, rates will be a lot lower than where they are now. That's where that's where we need to settle. I took from the chair's comments that we're not, I like this phrase, that we're not in a hurry to automatically get there. And I do think if there's disagreement of what's the neutral rate, it does make sense at some point to start slowing how rapidly you're getting there, just to figure out, given the lags of monetary policy, are we at neutral? Are we getting close to neutral? But the overall through line is, I was saying before the election, and I'm going to say now after the election, it has nothing to do with the election. It has to do with what the conditions are. And to me, the conditions on the dual mandate side are looking pretty balanced. And so we should be thinking over the next year and a half, the rates need to come down.
What do you think, core? If core's 2.8, that's a ways still, and unless you really
that's too high. Yeah, no,
unless you really don't mean to. And there's no reason. Why do you think there's?
What do you mean we really don't mean to? We mean to.
Either you move the goal. I'd move the goalpost. It'd be a lot easier for you guys.
No,
but
I'm not. We're not moving the goalpost.
Then you're
forbidden.
Not there.
No,
you're not there.
No.
And everything looks like the stage is set for inflation. Maybe it doesn't go back up. But do you really see a reason why it would come down with all the proposals and I know you said it doesn't matter with the election, but the stock market and Bitcoin and, government spending is going to happen. We're going to extend the tax cuts, probably. We're going to no taxes on tips. And you probably work, I don't know whether that benefits you with overtime. I'm sure you're there all the time, but your overtime's not going to be taxed.
Well, I like that vote of confidence, Joe. Look, here as the chair said in the press conference, when it comes to policy, our job at the Fed is not to speculate about that or weigh in on what the judgments are. Conditions change all the time. If the conditions start to change, we will take that into account. But we will get inflation back to 2%. Now, let's be a little careful. Backward-looking 12-month averages, they're useful. We should look at them. But what matters are the new months coming in. if we're getting new months that are as hot as 2.8, 3%, and we get that on an extended basis, that's too high. The Fed, we've stated it's a sacred covenant. 2%, we will get inflation at 2%. You can't look for a new job until you finish doing your job. So we will have to get inflation to 2%. What exactly is happening? If you see the import price number that Rick was talking about going up, we've seen blips. We saw in the beginning of this year a blip up in import prices that was just a bump in the road. And we went back to the new months of inflation coming in right around the 2% target. And that's where it has to be. Otherwise, the Fed has to act.
What do you make of the 10-year? It's done nothing but go up since. Can you give me like 20% because of this, 20% because of that? Part of it's from Trump. Part of it's from.
I think some component. We have to figure that out, and we have to monitor those long rates. The Fed is in the business of setting the Fed funds rate, and how that translates into the wider market is it translates both with a lag and with something about expectations. It's clear that in the realm of possibilities could be if they thought growth is going to be higher, that would affect what the long rates are. If they thought that the Fed's short rate decisions the rates would go down at a slower rate than they thought before, that would make the long rates higher. If you take a step back and compare to, say, the spring, they're up in the near term, but they're not up by that much from where they were several months ago. So we for sure should watch this, and the arguments in Washington affect those long rates, but our job is to figure out the longer through line, and as long as we stay on a path to getting inflation down to goal, and the job market is not falling apart, that's the through line that we want. And so far, the through line is basically still that. Unless the conditions change, I'm still feeling good about us being on a 12 to 18 month path of getting the rates down to something like neutral.
We have kicked around the notion that we really did have a bull market in bonds that we may never see again, like for 40 years. And now we've had a little bit of an inflation, well, more than a little bit of an inflation scare. Now it looks like it's back under control. But at the same time, we're at 36 trillion, and you're running a deficit this year that's bigger than any of us probably would have hoped for. The size of the Fed balance sheet, all these things. There are people that lose sleep over whether we're going to, the bond vigilantes are going to come back with a vengeance. The dollar hit a new high, though, again. So I don't really. There's a lot of cross winds. I don't know what to think, Austan. But do you think we could have a longer? You think that the bond bull market has resumed?
I mean, that's the same way of asking, are rates going to go back to what they were before COVID? The rate was zero. I mean, we were at zero for a long time, real rates of negative numbers. I don't think it's going to go back to that, in my opinion. But that's different than saying, do you think the rates now are neutral? I don't think they're neutral. I think we're still in a restrictive position. And that said, on fiscal policy, like I always say, Joe, our job, like the Midwest, where there's no bad weather, only bad clothing, those are the conditions of the economy. And if Congress does whatever they're going to do, and that affects employment and inflation, then the Fed has to take that into account, but only indirectly. We're always watching the conditions and trying to figure out what's going to happen.
Also, we can't go to Scoozy. I'm right on top of this. It closed 10 years ago.
I got plenty of places I can take you. But
no, then I was going to go to
me dinner, but now I can't take it because it violates the ethics.
Then I was going to ask you to go to Ditka's.
So we're going Dutch.
No Ditka's. What about
Gino's East?
Do you know Lou Mitchell's? Wait, let's go have omelets. You been there, Lou Mitchell's?
Omelets? Wait, you're going to come to Chicago have an omelet? Let's get a pizza, man.
That's right. Deep dish.
Pizza. Okay. Pizza. All right, yeah. All right, Austin, maybe a pizza omelet. Thank you.
Good to see you again.
All right, good to see you. Thanks.